How is it going, everyone? It is Monday, February 5th, 2024. First video back from vacation. I had a great time. Let's get into what happened to the market. So last week, as you can see, we had a lot of news come out. You can see that reflected in the volume for SPY. We had mega cap tech earnings. We had FOMC. We had unemployment report. So a lot of stuff going on in the market. And we're going to first break that down before we get into the picks reviews, as well as the pick for the video. So going to spend more time on that stuff because this is a lot of key information that asset managers are looking for in terms of how they want to allocate in the future. So let's just start with the news from last week. So first, let's go over the FOMC statement. Now, before the FOMC statement, we had some rate cuts priced in for March and May. So when I did the video last week, we had a 37% expectation for March and an 83 or 87, something like that, expectation for May. After the FOMC statement, which I just checked today, the March rate cut price in is 14.5%. The May is 62%. So these are both down. They're revised based on what the FOMC or what Powell said. Now, this is important because it confirmed our bias that the market is a little bit too dovish when it comes to the rate hikes. And because it is expecting the cuts to happen sooner than anticipated, it's not quite lining up with what the Fed is saying. They are more hawkish, and they've been hawkish ever since inflation has started. They are less likely to cut the rates until they see really strong confirmation that one, inflation is coming down, or two, the economy is starting to take a hit. Now, that bias is important because it contextualizes what happens with economic releases. Strong economic releases are initially having a downside reaction because they're going against what the market is what the market believes to happen for these rate cuts. So to give an example, we had the ISM services come out today. That came out at 10, and it beat expectations. It was expected at 52, came out at 53.4. So it beat expectations, and it's in expansion territory. The services are 80% of the U.S. economy, so that's a really good number, right? That means the economy is generally doing well, and we beat the expectations of how well it was going to do. Now, because the economy is doing well, the market interprets this as, well, the Fed has more room to tight and hold rates longer, which means that, well, maybe the rate cuts aren't doing so good. Let me rephrase that. Stronger economy means we have more leeway to hold rates. If the economy showed signs of weakening, higher unemployment, weaker ISM numbers, lower retail numbers, things like that, then the Fed says, well, we don't want to put the economy in a recession, so we will take our foot off the gas. So that was kind of what happened with the FOMC. That's sort of the rhetoric right now. Looking to the future, we don't have any meetings for February. The next meeting we have is March and then May. Given the expectations, a 62% cut in May, I still believe that's a little bit too high, in my opinion. We have to see, I think, consistent month-over-month low inflation data and strong economic data. I believe that it's still a little bit optimistically priced in. And we would have to wait to see what these next release of economic numbers bring in. So I believe the CPI for February, or I guess the February release, the March release, the April release, and the May release will be very important. If we show inflation still trending down in those months, right, and if we kind of get to that 2%, that 1%, I mean, not 1%, but under 3, 2.5, 2.7, then we might start to see the foot come off the pedal. So to me, the CPI number is still important to watch for, because as they begin to cool down, we'll get a better sense of the timing of these rate cuts. But until we see that data, which we have not seen, it's been coming down a lot, but it's still above that 2% target rate. So until we start to really approach that 2% target rate, I think it's hard to quite pin down when the cuts are going to happen. The Fed also wants to see slower core PCE inflation. That's a big metric they look at. So that's something to keep an eye on as well. Those are the rate cut expectations. Let's get into the mega cap tech earnings. So if we look at the Mag 7 here, Apple had about a neutral release. So let's actually pull up these charts while I speak. So Apple had a pretty neutral release. It was down before earnings, then it climbed back up. So slightly negative, but I view this as pretty neutral. It didn't really move anywhere, in my opinion. Amazon, really nice surprise to the upside. That was one of the positive ones. Meta, also very, very positive. Google was negative. And then Tesla was also quite negative after earnings. It still remains very, very weak. And then Microsoft, I view as negative-ish, neutral. So about the same as Apple. It hasn't really moved too much since the earnings date. No strong reaction either way. So out of the 6 that are reported, and NVIDIA reports this month, that's a big thing to watch out for, we had 2 neutral, 2 positive, 2 negative. So overall, I view it as fairly neutral, right? There wasn't a strong, 5 bullish, 1 negative, or 5 positive, 1 negative, or 5 negative, 1 positive. There wasn't a group inclination either way. So mega cap, I view that as a neutral in terms of what has come out overall. Now, if we look at the aggregate earnings, and I go to FactSet, is that right? About this, they have really nice general earnings releases, and the nice thing is that they compare aggregate earnings releases in terms of EPS estimates and revenue estimates. They compare the surprise for this quarter to historical averages. So let me give an example. So right now, about half the companies have reported. We're going to have a lot more companies reporting this week as well. So out of the half the companies that reported, our current EPS surprise is 72%, which is below the 5-year and 10-year averages, right? And that's important. You might say, okay, well, 70% have a positive EPS surprise. That's good. Well, historically, it's been 74 and 76%. So it's actually not been as great compared to what it is historically. Now, on the earnings side, the revenue side, they are 2.6% above estimates, which is still better. It's not below estimates, but it's still below the 5 and 10-year averages. So that story is saying that the surprise has been less than expected so far, right? It may change as more of the earnings report throughout these next 2 or 3 weeks. But right now, the overall surprise is less than historical averages. Now, to contextualize that, this is the first month where we have positive year-over-year growth. We've not had that in about a year. So first month of positive year-over-year growth, which is important. And to me, that signals that, okay, well, even though the companies, the EPS surprise, the revenue surprise are below averages now, this may signal the inflection point that we're starting to move up, and the chance of having numbers better than those historical averages should be higher in the coming quarter. So that contextualizes the less than the I guess historically below average EPS and revenue surprises. It's not, if you look at that in a myopic view, it seems bad, but when you contextualize what has happened in the market, it's not. It kind of makes more sense, right? It's less likely to be surprised when we're still making this move, out of this terminal rate hike, right? There's still, when those rate cuts are going to happen, that's still sort of on the table. The other piece that's important here are valuations. So the SPY forward 12-month PE ratio is 20, which is above its 5-year and 10-year averages, which is 18.9 and 17.6 respectively. So what does this mean? Well, It means that the market valuation is rich. It's higher than what it historically has been. So it doesn't mean short, right? I mean, it's been high for over a year now. If you looked at it in 2023, it's still been high. Look at Pete's videos. He's talking about high valuations. It doesn't mean short. It just means that asset managers are probably not likely to chase, right? Why would they rush to buy in a market that is overvalued, quote unquote? They're going to buy dips when it reaches a pretty good value so they can still get into that trend. So that's what I interpret the valuation to be. The final part is just some of the larger macro context. There was the Evergrande news in China, which I believe to be a big deal. In Pete's video, he mentioned the Europe GDP growth was 0. Money is flowing out of China and into the U.S., given some of the, the economic stalling that's been going on. So I don't really have the best idea of all of these, but as someone who's learning, I look at Pete's videos and say, okay, well, he's paying attention to this in terms of a global macro scale. Okay, well, now he's looking at Europe GDP growth. I want to look at Europe GDP growth for this month, right? What's going on over there? If that's going negative and the U.S. is positive, well, that's important to know, right? If the U.S. is the sole or the main driver of the global economy strength, right? If it's the sole reason that the global economy is strong, then it's not as bullish as if many countries are strong, right? We'd want to see Europe, right? It's a huge market. China, huge market. We want to see, Japan, Korea. Like, we want to see all those places strong in a broad manner, because it means that if one place starts to be weak, the other places are still also strong, right? If the U.S. starts to become weak, then the global economy you would assume that it would start to go down, right? Because if it's the sole driver that's doing well, assuming all the things being equal, U.S. starts to go down, then what's going to hold the global economy up? But not making decisions off of that, it's just sort of the macro context, right? So you say, okay, well, just pay attention to these things because we always want to look ahead. We always want to mitigate future risk. And that larger fundamental context, right? The valuation, the aggregate earnings, these things that asset managers are watching for and making decisions on, we just want to be aware of. All right, so that is the whole fundamental macro backdrop. Now, before this news week and after this news week, my fundamental bias still remains the same. I'm still bullish. The market adjusted to those rate cuts being priced in, which is the main thing. The mega cap tech earnings are doing pretty good, and we still have the positive aggregate year-over-year growth in earnings. So I view all of those as good signs for the market. And you can see here the reaction, right? And this price action contextualizes all of that. Here's FOMC statement. We had, I believe, Apple earnings and Meta earnings that came out. There's also some very strong semi earnings that have happened as well. But strong news here. We also had the unemployment report come out on February 2nd as well. So we had this sort of news propping up the market and counteracting the FOMC statement. Now, if we ignore all of that context, just look at it as a price action scale, we had this dip in the market, and then we had a move higher to a new all-time high. To me, that indicates a lot of market strength, right? These strong dips have been bought. We've not had any very, very deep retracement down. So if this breakout is holding, which so far it looks like it is, it held this previous high. Today we saw some selling. It wasn't able to climb back to that prior high, but it is strong. So not something I would take a lot of aggressive swings on, but something that I like to see. We didn't immediately engulf that candle. We had a strong move after it tested the support level here. So on a long-term technical basis, right, we still have a very strong move in the market. I mean, it's just been really rocketing up, to be quite honest. Still not a lot of deep retracements. Compression, broke the compression, pull back here, move up higher. I'm still liking what I see. And we're not too extended from the 8 EMA, which is very, very nice. we're kind of hovering around that level. If we look at the shorter term market bias, we had this pullback here, and then we broke above this prior day high yesterday. You can see how we broke this level, held the gains. Today we had a bit of a sell-off, a negative reaction for the ISM. We came back and tested this breakout, and you can see nice, pretty steady buying all throughout the day. Get back to the high, and then it could not challenge the gap. Got rejected from this gap, and just kind of started going sideways, compressing around VWAP. So pretty much ended up right where it started. A bit of a bullish hammer, a bullish reversal sort of day. So if we zoom out here and just look at the larger picture, all right, this move is still pretty strong. This is a decent retracement here. And we do not want to see that. We don't want to see this low being broken. We want to see this low now being preserved. And then we could join on a nice entry point above this level. All right. So our market bias still bullish on the long term. On the short term, I am bullish, but not insanely bullish. I think I'm a little bit more mildly bullish just because we weren't able to get above this prior day high, but we're still able to hold the breakout. So I view that as a small win, and I'd like to see some confirmation tomorrow that we're able to break past this day and get a next move higher. All right. So with that in mind, I know the market components today were decently strong. I think flight to safety was down. Tech was stronger in general. Mega cap tech was neutral, a little bit bearish. There was actually more stocks in heavy sell than heavy buy, which is a bit of a warning sign. So the market components for today, I view this as slightly bullish, especially after this move up. Let's go over the picks from the last video. So I mentioned, I think I had COP as a day trade, but I didn't give any swing trade picks. So let's look at the first pick here, which was Snow. So Snow was a mistake that I made when I took this trade on the 29th. I really like this. I think I like the move here. I like the strength in Snow. But I put my PCS after earnings, which was a big no-no. So what I did was I got in for like a 110 credit and an order for a 105 credit, 105 debit. So I was like, all right, I was totally wrong about it. Let me get out, see if I can get a small win on the stock, and then, live to fight another day. So made a big mistake on Snow, but I was still able to get out for a small win, which I'm going to take. Could it go up higher? Yeah, it could definitely go up higher, but I'm not willing to risk it on a stock that's this choppy when I'm out of earnings because I'm trapped, right? I don't want to be trapped in the position because I don't have the time decay working in my favor. And I also don't want to reinforce taking and staying in these China trades. If I make a mistake like that, I want to be out as quick as possible for a scratch or a small win. All right, HLT. So we took that trade over here, still doing pretty well. You had plenty of opportunity to exit the trade. You see earnings is coming up. So on any sort of next pop higher, I would take profits into HLT. But I believe plenty of opportunities to take profits. So I am counting that as a win in my book. Let's look at Ally here. So we took Ally over here. Was a decent breakout. Has been stalling and has been losing relative strength. So Ally, not been great. Now, if we took it on LRSI cross over here, we can see that it crossed up above AVWAP E today. So if you were more conservative, you could have taken the loss here. Today, Ally, it gapped down, which I did not like. Didn't like the gap down. It tried to get back into the gap, and it got rejected. So I'm not quite liking Ally over here. This is probably my stop right here. You can see there's a lot of support at this level. So this would probably be my breakout support. This is one level. This is two levels. And I'd like to see Ally be able to climb up higher. I don't like how it retraced back down when the market was going up. It's not what I'd like to see. So I would temper my bullishness over here and then see if I can get a small win on Ally as it tries to test and break through this level. If it comes back, if it breaks through this horizontal level down here, while the market has been strong, then I'm going to take the L. So Ally is looking like an L. I'm going to give it one more day, though, because we are at our horizontal support line on this trade. All right, so let's look at some of the picks here. So one stock I liked quite a bit was AXP. There's a chart. AXP, you can see here, really nice post-earnings move. Compressed, held the gains, and what I loved about this was, let's look at the market from the 30th to the 31st, right? Hit down, really hit on the FOMC statement. If we look at Ally on those days, or sorry, AXP on those days, here's the 30th, here's the 31st, right? It held these gains. It could not get past this low. Let's zoom into what happened on the M5 chart. Yeah, I mean, we're over here. We're testing this low. Market tanked a little bit. Ally's holding all of its gains. Really nice relative strength. You can see the strong strength relative to its sector. How there's a lot of people buying this stock. And then we eventually ended up surging higher. Today, we had a pullback here, tested this breakout a little bit, and then we started to surge higher, closing above the prior day, or we have above the open for today. So I like AXP. It's holding the gains really well, and it could grind higher. I didn't have actually time to take this trade, but this is one I like quite a bit. DKS is also one I liked a lot. Nice compression here. You can see it. This is the all-time high. It broke through, chopping around, and it compressed. And let's look at what happened here. Here's the 30. Sorry, here's the 30th to the 31st. A little bit of relative weakness, and then it did manage to surge higher on the market move up. However, on today, you can see that it started to actually rebound a lot quicker, or actually it really had a lot more relative strength during this market drop. You can see this double bottom over here when the market made a lower low, and then it managed to break through the high, fill in the gap, and even do then some, closing near its prior day high. So I like DKS. It's not quite ready, I think, but I am really liking what I'm seeing in the stock. And it has these big moves, compresses, moves up, compresses. So I think better for a longer term swing. But it's not, I think, the most volatile stock. It kind of grinds up pretty well. ATR is about 3% of its stock price. MPC, this one is also quite close. This one is a little bit of a choppier stock, but let's just kind of contextualize what's happening here in MPC. So we had this really nice run up to get to this level. I'm not sure if this is an all-time high or not, so let me double check that. That is a all-time high. Okay. So we got to this level here, and then you can see it needed some time to digest this massive move up, right? Like most energy stocks are not making this giant move up. With this giant move up in MPC, it's just digesting all these gains, and like this took a while, right? This is August 11th. We got this breakout January 30th. So it had to digest this move for about 6 months, right? Finished this turkey sandwich. We got the breakout today with earnings. Breakout today with earnings, and we are digesting some of this move here. And we're seeing if we can go higher. So MPC came up to its high of the day and found a little bit of resistance at this level, but it's been holding up pretty well with this market, with the market decline down, and needed some time to digest the earnings. So I do like MPC as an overnight or 1 or 2 or 3 day swing at most. You can see how like when the nature of the stock changes, it becomes really choppy. Right, and when you see MPC here, this is really nice, steady buying because something has materially changed in the stock. Right, there's some news that has been very important. So we want to see this sort of steady buying in the stock. This is a really big move up that has to be digested, and then when we see that move being digested, we start to go up higher. I would like MPC. So what I did was I'm going to set a good to cancel alert. Yeah, I already did that, but I'm going to go here and set a good to cancel alert at this level. So if MPC opens up and breaks above this high of the day here, I think we have a nice trade all the way up to maybe 173, and get a nice dollar in the stock. The trade that I took today was Netflix, and I'm going to recommend that as my PCS for the day. So I like this PCS because we had a nice strong reaction from earnings. We're digesting the move here, not really moving up insanely high, but we did not drop with the market dropping. It's not moving up, but it's also not dropping. We know that there are buyers here, and that's the tell. The 30 to the 31st, right? Flat, completely flat, which is really great while the market went down. So I checked the Netflix March 8th, 535, 530 put credit spread for $1.10 credit. So it's about a month, and that's about the highest time frame I go. I try to go 3 to 4 weeks. And as long as Netflix remains above 535, I will get my $110 credit. So that would be my pick. This is a Pete pick as well. I really like this trade. If I had to do a non-Pete pick, it would probably be AXP. This is just a really strong chart, really strong daily chart here. So if you're looking for a shorter term trade, I would go with AXP. I still like the strength today. And finally, the last pick that I enjoyed a lot was SMCI. Now, it's made a massive run up, right? It has basically gone up 100% in about 3 weeks. Strong guidance released early. Then we had a good earnings reaction over here. The thing is, this stock, right? Insane. This ATR is just off the charts. So with this stock, I don't know if it got filled here. I don't think it did. I think a call debit spread would be great on a stock like this. One, you're able to take advantage of the move, right? It generally moves up each week. This climbed up higher. We don't have really any room until, resistance, which I don't even know if I can count it like that. I mean, it's just gone absolutely just parabolic. Huge run, and this digest the gains, a massive run again. Just absolutely parabolic. Not really any strong resistance in the way here. And the CDS sort of mitigates your loss on the downside, right? Because this stock is a little bit, extended is perhaps not the right word. It's just hard to quite see it in the charts. You can see here I came back, tested this level, and then inched out higher. I think, February 1st would be a great time to take a stock like that or a position here. If you look at what was happening in the market and what was happening in SMCI. Really big move here. It may need a couple of days to digest the gains before it goes higher. So I would either do a CDS, or what I've done is I've set an LRSI alert on the H1 to enter on a pullback. So if we get that pullback here, it shows some relative strength, then I can get in on the stock. And yeah, you can see absolutely massive volume as well. So those are me out of all my 3 picks. If I had to choose one, let's go, because the Netflix is kind of Pete's. AXP, I believe, was also in the chat. I haven't checked the chat today. I'm going to go with SMCI as my pick. I'm going to be different. I still love the price action of the stock. And I'm going to put that in my notes here. This has been a really strong sector. We have a nice move higher. And I would try to target a 1 ATR move, so you can get, if you get to 700 on this thing, that would be a great place to take profits, in my opinion. So SMCI is gonna be my pick for today, and I want to conclude this video with just what I've kind of done to get back from vacation, things like that, because I think it's important, and it also helps me process what's happening. So today I came back from my trip. And to kind of start things off, I view trading as almost like being a professional athlete, right? Your performance is everything, right? It doesn't matter how long you're on the screen. What matters is what trades you take and how well you execute your system, and is your system profitable. So this morning when I woke up, I woke up initially at 5:45 and like, all right, I could have traded, but I was just tired. My sleep was off from the trip. My eating was off from the trip. I wasn't really exercising. My body and my mind weren't in the right state. So instead of trading, I decided to sleep in. I was like, let me get my performance down. Let me get my sleep in. Let me get back in the routine. I like to work out in the mornings before I trade. I like eating healthy. I like having my body in the best shape to be in, to perform. So if I get my routine down, and I also had to clean up stuff for my trip, like my laundry and all this clothes and unpacking and everything like that. So I needed to sort of get my life and my body in order before I could get into the trading. Then I also need to just catch up with what the heck happened, especially after being out in such a newsy week. I needed to get my market bearings, and I spent longer than usual this morning, probably an extra 20, 30 minutes just looking through the charts, seeing what happened, looking at the news, just getting my bearings because I wasn't there day by day to really see what's happening. So one thing that I've learned from doing this, because if people have trips and you sometimes you take a day off and you're out for a day and things like that, it's just important to get yourself back into it and not feel like you have to make a trade, right? I made one trade today, which was a Netflix PCS. That was it. And I knew about the trade beforehand because even though I wasn't able to trade when I was in Hawaii, I was still able to watch a Pete video and say, okay, well, I like what he sees in Netflix. This makes a lot of sense to me. Let me see how it's doing and what the market's doing on Monday. And, I'll see if I can get a good strike, a good credit, and see if the trade still makes sense for today. And it did. So I took it. And that's it. One great trade a day is all you need. I know that if I get bad sleep, if I'm not exercising, if I'm eating poorly, if my routine is off, then I'm unlikely to perform very well. And I can feel rushed, and I can feel out of control, and my probability of taking lower probability trades goes up, right? I'm more likely to make bad decisions when my mind and my body are not in order. And trading is all about your decision making. Are you a profitable decision maker? That's what it comes down to. So I know that for myself because I've made those mistakes in the past and I've learned from them. So today I didn't really trade. I didn't look at the chat that much. I just got back into it and I set myself up for success for the rest of the month. That's what I did today. And if you're in someone where this is a similar process where it's happened to you, you need to take your time to get back into it. Don't feel like you have to rush or make a trade, even if it's a great setup, right? Today, I don't think it was the best market setup, so I didn't feel awful about missing it, right? But what if let's say today looked like this price action where it was just steady up, and I was like, oh man, I missed such a great move. And it's like, look, man, like there's always going to be moves, and when you go out, you're going to miss some of these moves, and that's just what happens. But when you have a system that you trust that has worked over time, you're confident that these moves, you're going to get another crack at these, right? This is not the last move ever. There's always opportunities to be had, and you want to be patient and you want to pick the best. So anyways, that is the last of this video for today. Again, my pick is SMCI. I will do CDS on the stock, and I will catch you all in the next video.